G'day guys, Seeney here, and today we need to talk about one of the craziest things that's ever happened in the market in a long time, and that is Gamestop. Okay, so straight up, this is one of the craziest things I've ever seen in the stock market. I've been trading for a fair while now, and this is insane. So I want to get into some of the details of what was going on there and my perspective on that. But before we start, make sure you smash the like button and hit subscribe on the channel. It really helps to get these videos out to more people. Graham Steppen might drink his 20-cent iced coffee, but I drink water because it's cheaper. Okay, so to start with, I think we need to start with some background about what this whole situation is. So it all started with a guy named DFV. I can't say his full name on the channel because otherwise it's gonna get flagged. And this particular person bought $50,000 worth of GameStop call options. Now, a call option is basically you're betting that the stock is going to be at a certain price at a certain time. And if you're right, any amount over that starts to earn you a lot of money. But if you're wrong, you lose all that money. So this all started back in 2019 towards the end of the year. So now there was a very interesting discovery that was made revolving around GameStop. Now, because all of the hedge funds have to put out, their filings and what they're buying and they're shorting, all of this data had been amalgamated and collected, and it was uncovered that GameStop had more than 100% of its shares shorted, which is just crazy. People were shorting more stock than actually existed for GameStop. Now, shorting a stock means that you think the value of that is going to go down over time. You think that the company is going to do worse over time. And a lot of hedge funds thought this, so they were piling in very heavily and shorting the stock, expecting it to go down. In fact, it was way more than 100%. It was 140% at one stage of all shares that GameStop had that were being shorted, which is a massive number. Now, this was uncovered by Wallstreetbets, and they realized that if they bought the stock en masse, they would be able to squeeze these hedge funds shorting the stock out of their positions and basically demand whatever sum of money they wanted, as the hedge funds would have to cover at any price. Hedge funds had shorted more stocks than were actually in existence. So basically anyone that bought the stock, if the hedge funds were getting squeezed out of their position, that means they could demand pretty much whatever premium they liked. So retail traders bought up GameStop shares and call options, forcing hedge funds into a corner. This insanity sent GameStop up over $400 a share when it was only trading at $4 or $5 a share initially. So this caused hedge funds to lose billions of dollars as they had to cover their shorts. Now, when you buy a stock, if it goes to zero, then the most money you lose is the amount that you bought. However, with a short sale, your losses are basically unlimited. If you short a stock and it goes up 200%, you lose double the initial investment. So your losses are basically unlimited, and this has caused hedge funds to lose billions of dollars. One of these hedge funds in particular is Melvin Capital, and they had a massive short position in, and this particular move nearly sent them broke, and they had to be shored up by Citadel to make sure they stayed afloat. The retail traders had the hedge funds by the balls, and this has showed no signs of slowing down. But then the institutions got involved. Very recently, many brokerages shut down access to GameStop and a number of other stocks, only allowing people to sell and not to buy, while hedge funds could trade freely. This was a despicable move from companies like Robinhood and Webull, treating their customers like children who can't manage their own risk and make their own decisions. You know you've messed up when AOC and Ted Cruz are on the same side of the argument. Even Elon Musk got involved on the action as Melvin Capital shorted Tesla for years, bet that the company would fail, and bragged about it to the entire world. It is believed that much of the global infrastructure has not been able to cope with demand from buying these shares, with many brokerages going down and people being unable to place trades. It'd be great to hear a lot more transparency around this area, because it does seem like there has been some very nefarious stuff going on to protect hedge funds. To make it worse, there's reports going on that Robinhood was selling people's Gamestop stock without them actually placing an order, just closing their positions without asking. So what is the reason for this? The reason is that this is a true David and Goliath story. In 2008, the financial crisis, so many families lost their jobs and had zero recourse, while much of Wall Street got bailed out. And they could take as much risk as they liked, the government was going to bail them out. But unfortunately, the regular people did not have this option. If you bought a stock and it went to zero, that was your fault. But with the hedge funds, it seemed to be that, they got a lot of protection against that, which is incredibly unfair. So many people see this trade as sticking it to the man and getting their own back. DFV from Reddit has now turned their $50,000 trade into tens of millions of dollars, which is absolutely incredible. That is life-changing stuff. So I personally see this situation as brilliant. Wallstreetbets saw an opportunity as hedge funds were taking on too much risk and exploited it in exactly the same way that hedge funds have been doing to other people for years. All of this is the free market at work, and it's beautiful to watch. So that's basically the summary of what happened with the GameStop situation. I'd love to hear what you think in the comments. It's been very interesting to watch how this has unfolded, and I'm sure this won't be the last that we hear about it. So make sure you like and subscribe to the channel. It helps to get these videos out to more people so we can have a look at the world of finances a little bit more. It's a very interesting one. So thank you guys so much for watching, and we'll see you later. We'll be right back.